Hey guys, Ross here, and I'm excited to bring to you the Shamoo indicator. This is going to really change the game for a lot of traders. Gives you just this extra boost of confidence in your trading. And so I want to explain how this works. When you're looking at this chart, you are going to notice that there are periods of consolidation in the market, or I should say compression, not consolidation. And that is where you see these white bars. And what this means is that the market is squeezing together and there is a bigger move that is about to take place. Now, when you're trading options, you're not wanting to trade the expected move. You're trying to find greater than expected moves. And so this is going to help you to find those. Now, it is a good indicator that is a lagging indicator. So meaning if you wanted to get greedy, yes, you could start trying to take trades while the bars go white. That's okay, but it's not considered the actual move. What we want is confirmation candles saying, hey, this is the direction something's going. So as an example, here we are on CrowdStrike, and you can see that even though we have downward momentum, these are not candles that we've taken any sort of position on yet. This is just a compression. Now we get to this candle right here, and what happens? We have a sell position, and it ends up going from at the top of the wick over the next week, $206 down to $143. Boom, big move. Now, anytime there's a breakout, you do have room for error to where there could be false breakouts. And because of that, you make sure you use the proper allocation plan. And I'm going to show you how you can set up your own stop loss and take profits on this as well. You look right here. We have all this compression that has happened. It tells us go ahead and buy right here. Now, I want you to imagine here for just a second that you're looking at this on this chart like this. And you're seeing this one dip lower, making lower lows and lower highs, and you're on this downward trend. You see this come up and you're like, oh, is this going to keep going? Then you see it dipping back down and you just see it's kind of playing, and then you see it says buy. You know, it's easy in hindsight to always think like, oh yeah, that would have made sense. But look how it ended up climbing. Look where it ends up going. It ends up going from $186 to $229. That is some massive money when you're trading in options. Look over here. We have a sell position right here. $181 drops down to $150. Right here, another sell position, $253. Over the next course of time here, the next week or so, it drops down to $185. Here's a buy position here that is at $268, goes all the way up to $296. Now here's a sell position that I personally would have not taken, and I'll show you why. I want you to make sure you add this volume indicator to your chart. And that's easy to do. You just go up to indicators, type in volume up here, and you add it. Once you add that volume indicator to your chart, when you see a sell position, if you're seeing that you have bullish volume, don't take a sell position here. That is something that will be updated into a future, one of our future updates to this. But for now, don't take the sell position. Make sure it matches your volume indicator. So then here we go. We have another one. It tells us to sell this right here. We would have gone from $243 down to $227. Here's another sell position right here with compression going from 191 down to 178. You can see this thing is very accurate. Now here's another candle that had bullish volume. And although it was accurate, it was a very short-lived play. It didn't last very long. So here's one that, you could have bought this at 236. And if you held on to it up to this day, 236 to 246. So I'm going to show you how you can figure out where your take profits and your stop losses should be. Main thing is that you want to average it out, make sure you're doing the right allocation, because you will take a loss here and there. No indicator can be 100% of the time, but you get the point. Now, the way that I like to set up my stop loss, my take profits, and figure out, is this move even worth getting into? I grab my Fibonacci retracement candle here, and what I'm going to do is go back before compression began, and I want to see what is the most previous low to high. And I'm going to start there, and I drag that there. So I go my previous high to low, or low to high, depending on if it's bearish or whatnot. So now you have these different levels. We're going to zoom in here. Our buy candle took place at this, at your 238. And so we would have set a target price here of 251, and we hit it. We would have set that would have been our first level. Now, had you seen it breaking past that, maybe you would have said, okay, you know what? That's a good area to take. Now, as far as your stop loss goes, it depends. If you're trading spreads like I do, I actually don't set a stop loss, because when I take a spread play, I have a max loss in my play, which, if you don't understand that, we have a private investor group that we trade in and, call our plays out in, and we have an entire training in here on, how to set up your trades and stuff to make them profitable. But that's how I like to play mine. Now, what if you're in this position like this, where you've got this bearish momentum here? What you're going to do is take your Fibonacci retracement lines, and I'm going to go ahead and what I'm actually doing is lining this up here, because I have to do this the opposite way. I'm going to go from my previous low to my previous high, and my sell position took place right here. This would have been my take profit level. Now, some people might have gotten excited anyways and taken their profit over here. That's totally fine. They would have made a lot of money on this. There'd be nothing wrong with playing that a little conservative, because you're still making a move from $205 to $184. That would have been a great move to take. Now, if you look at, for instance, this position here, let's grab our Fibonacci retracement candles. We're going to go from a previous low, which would have actually been here, to a previous high, like this. And check this out. We had the sell candle take place in our 178. It touches it. You see how that works? So that's how you can figure out whether a play is worth getting into or not. Now, if we look over here at this one, this is a false breakout anyways. It did drop in one day from 248 to 41. If you're wanting to be a marketer, you could say, oh, that's a winning play. It went from 248 to 241. I want to play that lasts longer than a day for the most part. I'm not a day trader, so I don't count this as a winning trade. So when you hear me say 86%, I'm not counting that kind of crap. Okay, so let's go from a previous low to a previous high here. We've gone like this, and notice that we aren't even past our gray box. So would you have taken this? Could you have taken this? Sure, you could have, but I personally would have not, especially because of the bullish volume candle here. Okay, let's continue on here and take a look at one more level. We pull up our Fibonacci here. We are going to see, where should we take our profits. Remember, once again, we're going to our previous highs and lows before this consolidation occurred. I'm going to go like this, and boom. Notice our buy signal occurs in this box. Our target price, first target price, is going to be at our next level of 282. Notice that it actually continued to bounce off of this level a couple times. So at 282, I would have been out of that trade. That would have been me gone. Let's go over here to this sell position right here. We want to go to from our previous low to our previous high. So I'm going to go like this. Boom. So I've got a couple different levels that I want to see if it closes past. So here we had our sell signal in this box. This would have been our first target. So I would have probably, just being honest with you, I'm not the heroic guy. I would have probably taken most of my profits here. I've always placed multiple spreads in any spread, so I would have taken it here, probably left a few in the game because it closed past this line. Now, next day, it opens up. If it would have continued to retrace back, I would have likely said time to close out the remainder of these. but it doesn't. It actually keeps going lower and lower, and it keeps trading lower over the next several days to where we're now saying our new target is $207 for the remainder of our take profit. And we could have had a really nice long play here in this drop. So that is how the Shamoo indicator works. You want to make sure you're using it in conjunction with your volume indicator until we code that part in. Right now, I am actually in on this play, and I want to show you something interesting. So the Shamoo indicator will only take trades that are over or below the moving average of 10 periods. So I'll give you an example. Let's say that that we are above the 10 period moving average. It is only going to be looking for bullish plays. It will not be looking for bearish plays. And that's a safety thing. Now, if you look at this morning here on CrowdStrike, because I'm actually in on this, we have a buy signal. Well, this actually occurred on the 7th, and today is the 11th. But on the 7th, we had a buy signal that was shortly before the weekend. And today it retraced a little bit, and it actually, if we zoom in, did push past our 10-day moving average. But what happened? Buyers have pushed it back up as of this point. Now, could this be one of the losing trades in the future? Sure. But the reason why I'm pointing this out is because I have a level of confidence in this trade to leave it, even though a few things. If we're going off human pattern recognition, we would look at this and say, oh, it looks like this is a long wicked candle here. This thing's going to sink. You know, you're going to probably be down here over the next, couple weeks or over the next couple days. And maybe. But if I look at this, we do have this bullish momentum. We have this 10-day moving average that it likes to bounce off of. It did break past that moving average down here, and it certainly could again. I have 2-month out plays. I'm not doing same week plays. The premium sucks in those if you're trading options. I'm doing a month out, 2 months out, depending on what I feel is going to occur here. And so I am okay with it dipping out down and going back up. And this indicator gives me the confidence to do that. It gives me the confidence to do that and to just wait. Like, for instance, right here, let's say that you are on this candle and you said, I'm going to buy some put debit spreads because it's saying it's going down. April 27th passes and it went down, but not that much. Well, it went down, but it's trading up and down. Then April 28th comes by and it starts to trade up and you're like, oh God, this indicator sucks. This thing's wrong. And then April 29th comes and okay, well, it's starting to go back down again. Maybe this thing's good. And then May 2nd comes and oh, now you're going back up. What in the world is this guy's problem? Why is he preaching Shamoo is so good? Then May 3rd happens. We touch this 10-day moving average line right here, just like we did on 29th. But we're still going down bearish. What happens on the 4th? Buyers squish this thing up, but they can't get it past the 10-day moving average, and then we plummet. So you have to realize that when you place a position, because this is the day chart, so each candle is representing a day, it could take a week, 2 weeks before the move actually occurs. It could happen. And so because of that, we have to be patient and do the right trade allocation. And so what I mean by that is if you are trading and let's say that you are putting, let's say that you put $500 worth of a trade into this particular move. You put $500 into this move and you see it going backwards and you freak out and you stop because that was too much of your balance. That's too much. Now, if you have a $50,000 portfolio or a $10,000 portfolio, $500 isn't going to bother you that much. But if you have a $1,000 portfolio, don't bet the farm on one move. Have $100 towards a particular trade. That way you can see it through. And if you're doing spreads, if you don't know how, you got to get into our investor program. We teach how to do this really well. Spreads have a max profit and a max loss. So as long as your max profits are always exceeding your max loss, or you're hitting your max loss way less often than your max profit, you're going to make money. But here's what you don't want to do. You don't want to be turning things off so soon, because let's say that you place 10 trades and you allocate $100 towards each one of those, and 80% of them win. So that means that you got $240 collected in extra premium that you went up. Great. But your two losers, your max loss was $100. Now you're down to $40. They call that picking up pennies on the train tracks. You're making money until something runs you over. Got to make sure you use the proper allocation and you let these trades play out. Do not be doing 1 week options. Do this as, and here's a tip, choose end of month options. So if you need to let this play out, it's okay to do 1 month out, 2 months out, but make sure that if you're doing it, I like end of month options because they're more liquid. That's another little golden nugget for you that's beyond just the indicator. So let's say that this does come and it bounces back off of this. I'm confident right now that we're going to 200. What gives me that confidence? If I go back to my previous high to low before consolidation took place, look what happened here. My buy candle was right here. And while I was in this box, and my first take profit is going to be at this $200 mark. That's what I'm looking for. I'm actually trading butterfly spreads here right now as well. So hopefully you guys enjoy this indicator. I will be pushing out many updates. I will be sending out messages as updates get pushed so you can go in and apply them. If you have ideas as to like, hey, you know, if you use this indicator with this indicator, it's even more accurate, please tell me. I would love to be able to keep getting this thing as good as you can possibly get them. You guys have an amazing day. And I'm going to just be posting this on my YouTube channel. We'll see you soon.